Bitcoin has been roughly flat for 12 months now. It's kind of had a lack of catalyst. It's kind of one of those things where, it gets ahead of itself for a period of time and then corrects. And some of those corrections go on for 6+ months. This one basically went on for 12 months, even though there were new highs along the way. I've kind of been in the camp of always kind of being a bearish bull, which is I try to avoid price targets, more focused on direction because you can't necessarily predict like illiquid moves and kind of euphoric periods or kind of lack thereof. But when I do get kind of cornered into giving a price target, I think one of my main ones was 150K for this year. So it looks like we're probably not going to touch that. But like John said, we still have 2 months to go. So we'll see what happens.
As Bitcoin sheds its speculative skin and takes its place among global macro assets, Lyn Alden's latest analysis offers a sharp reminder that the digital currency's next chapter will be defined not by hype, but by liquidity, adoption, and institutional reality. Lyn Alden's perspective on Bitcoin offers a compelling, data-driven lens through which to understand its evolving market behavior. Her comparison of Bitcoin to the Mag 7 megacap tech stocks, such as Apple, Microsoft, and Nvidia, underscores a fundamental shift in how Bitcoin now moves within the global financial system. I find her analogy particularly apt. Just as those tech giants defied valuation limits through persistent adoption and innovation, Bitcoin too appears to be maturing beyond its early speculative phase. Alden's view that the days of easy 5x gains are behind us aligns with the reality of a trillion-dollar asset integrating into institutional portfolios. What stands out most in her analysis is the fading influence of the traditional 4-year halving cycle, a mechanism once treated as Bitcoin's core heartbeat. Instead, macroeconomic liquidity, monetary policy, and institutional flows are emerging as the new price drivers. I agree with Alden that this transition marks Bitcoin's evolution from a volatile, retail-driven phenomenon into a structural macro asset. Her forecast of a gradual Federal Reserve balance sheet expansion supports the idea that liquidity will remain a tailwind. In essence, Alden frames Bitcoin not as a speculative gamble, but as a maturing financial instrument tied to the pulse of global capital. Alden's insights remind us that the real story is just beginning. Share your thoughts in the comments below, and don't forget to like, share, and subscribe for more deep dive crypto analysis.
Yeah, I think an example to be familiar with is the Mag 7 stocks. Basically, these really kind of mega cap US tech stocks over the past 15 years. For a lot of them, if you ask, what cycle were they on? I mean, not a
Yep.
particularly, specific cycle. And the booms and busts were muted, because they started from a larger base than Bitcoin was, 15 years ago. And they've gotten, some of them to a larger market cap than Bitcoin is now. And they've traded in traditional markets. And if you ask people, before the idea of a $1 trillion company was, an extreme thing. And now, companies have been over 4 trillion. I think Nvidia might have touched 5. I'm not sure, but several have touched 4 at this point, and more have touched kind of 2 and 3. And so a lot of these companies over the course of 5, 10, 15 years reached heights that most people did not expect them to. And they just kind of kept every time they would say, okay, this price to earnings multiple is a little bit high, or this is kind of concentrated. For a period of time, it might cool off for 6 months or 12 months, and then it just has another rip higher because it's fundamentally being adopted, whatever kind of product or service they had. And I think Bitcoin's kind of in that phase now, where there are some bears that are saying 2 trillion market cap. That's kind of enough. How could it possibly go higher than that? It's magic internet money. How could it go higher? Kind of like how could a phone company, like Apple, how could that get as high as it is, or how could an operating system company like Microsoft get as big as it does? Or and I think basically over the next 5, 10 years, it's going to kind of behave like that, where it surprises bears to the upside, where it just gets bigger and goes on for longer than they think. But it doesn't mean that basically bulls are going to be entitled to 5x multiple gains in like a typical 12-month period. It's not on that kind of easy 4-year clock as it was for a period of time. And I think even the 4-year cycle, and I've done research on this, the last couple cycles, it was kind of a blend of the halving cycle and the liquidity cycle. And so as basically we have the kind of the importance of one declining to the point where it's almost negligible now, and then those other factors kind of gradually increasing in prominence as they affect Bitcoin's price. The type of things that drive a lot of high quality assets up, or put kind of near term pressure on a lot of high quality assets. Various things related to the hardness of money, liquidity, that kind of thing. A lot of the factors you cited, and then as you pointed out, I mean, unlike 2022, we don't see a major contraction in a lot of these things. Instead, some of them take a pause for a period of time. Others are still accelerating. And so I expect the numbers to be pretty good in 2026 and 2027. I think we're ending the period of Fed balance sheet contraction. We're entering maybe a flat period for a period of time, and then most likely expansion for a while. I would say not at the rate that some people think. My general view is that we're not going to get some massive QE anytime soon, but that instead we're going to return to a period of kind of structural balance sheet increases at a moderate pace, and that over the kind of longer term is beneficial for a lot of assets, including Bitcoin. Um, and it's more the persistence of it, kind of the length of it. And I think another factor that kind of weighs it is that because we have a two-speed economy or K-shaped economy, depending on how you want to refer to it, that impacts financial markets too. I mean, we've had kind of a two-speed asset market, which is if you're one of the big mega cap tech stocks or gold or a handful of other assets, you've done amazing. A lot of mid-level companies just kind of chop it along. Um, and in this particular cycle, we have not really had retail investors show up. So you don't see, for example, Google Trends searches for Bitcoin not doing particularly amazing. A lot of the demand this cycle has been on that more institutional side, which includes, higher net worth retail investors as well, and including, of course, some retail investors. But it's not a very retail driven market like prior cycles generally have been. And that's in part because a lot of retail investors are strapped for cash at the moment. There's not, a lot of them are financially struggling.
As Bitcoin enters a new phase of market maturity, Lyn Alden's insights reveal why this cycle may be driven more by macroeconomic forces than by the traditional halving rhythm. Lyn Alden breaks down where we might be in the current Bitcoin cycle and why this one could look different from previous runs. While the classic four-year halving pattern has long guided investor expectations, Alden argues that the macro environment, defined by liquidity, regulation, and fiscal dynamics, has become the primary driver of Bitcoin's trajectory. I find her view refreshingly pragmatic. Rather than labeling the current phase a bear market, she sees it as a natural consolidation period within a broader structural uptrend. Her self-described stance as a bearish bull captures the sentiment of many long-term investors who remain optimistic about Bitcoin's fundamentals but realistic about short-term headwinds. What resonates most is her observation that Bitcoin's ownership is increasingly shifting toward institutions and sophisticated investors, which is making the asset behave more like traditional markets, less volatile but more responsive to macro conditions. I agree with Alden that as supply issuance becomes less relevant, factors like liquidity flows and fiscal dominance will shape Bitcoin's price action. In essence, she paints a picture of a maturing asset, still resilient amid economic turbulence, quietly preparing for its next sustained leg higher. Let's get back to the interview.
Because we have kind of an economic malaise. Kind of the one thing that does look pretty negative for asset prices, but it's kind of the era we're in, is low consumer sentiment and business expectation sentiment. So a lot of the kind of the boots on the ground stuff is pointing toward weakness. And I would say the key reason for this is fiscal dominance, which is for the most part, if you had consumer sentiment this bad, it would look like a recession. So a lot of these other things would also be rolling over. But because we have fiscal dominance, we get an unusual separation from things like purchasing managers' indices or consumer sentiment, these kind of real time gauges of the economy, while asset prices can kind of levitate. And that's in large part because of fiscal deficits. And I think that that's kind of a structural thing that we're in now. And so you get kind of pockets of weakness and pockets of strength, and just kind of ebbs and flows along that kind of run it hot floor. So I don't think we're in like a full on bear market. I think we're obviously in a weak portion of the cycle, and Bitcoin has been roughly flat for 12 months now. It's kind of had a lack of catalyst. It's kind of one of those things where it gets ahead of itself for a period of time and then corrects. And some of those corrections go on for 6+ months. This one basically went on for 12 months, even though there were new highs along the way. I've kind of been in the camp of always kind of being a bearish bull, which is I try to avoid price targets, more focused on direction, because you can't necessarily predict like illiquid moves and kind of euphoric periods or kind of lack thereof. But when I do get kind of cornered into giving a price target, I think one of my main ones was 150K for this year. So it looks like we probably not going to touch that, but like John said, we still have 2 months to go, so we'll see what happens. And so that's like, we hit 125 or change. I had a similar thing last cycle where at first my target was a trillion market cap, which was somewhere in the ballpark of 50K. We touched that. And then I gave a target of, I think we'll hit 100K. That was still lower at the time than many of the bulls. We ended up not reaching that. We ended up only getting to 69. So far we're kind of in a similar thing where we kind of hit initial bullish targets, new highs and all that, but then kind of stagnate a little bit. I generally wouldn't look too much into this whole kind of 4-year cycle aspect. As the halvings continue, the new supply is a much smaller component of the total supply and demand out there. It's more about what price will unlock coins from existing holders, either because they want to sell into bullishness or because they're selling into weakness. They're afraid of their position. Either one. That's the type of thing that can really kind of affect price more so than what is the kind of the rate of new coins hitting the market at this point. In addition, prior cycles, because it was a much smaller illiquid market, and with kind of in general on average less sophisticated kind of participants, not necessarily in terms of like intelligence or anything like that, but in terms of hedging, in terms of kind of how they tend to rebalance and stuff like that, we had kind of more non-financial people involved. Basically, people that are sophisticated in other areas, not in terms of like sort of portfolio management. It didn't really follow normal rules of assets. Whereas now that it's kind of held by those who tend to hold other assets, they tend to treat it like they do other assets, which often results in rebalancing and things like that.
Yeah.
And so in prior cycles, like the market cap would get way ahead of the on-chain cost basis. And so it kind of like some of that price spike would be ephemeral because it's like it didn't really reach that price on a sustained basis. It was just kind of like a small number of coins would then, when you extrapolate over the whole market cap, kind of say this is the current price. But it wasn't like a price that was kind of a very liquid price. And so I think we're past those kind of periods of just massive disconnects. We still have the on-chain average cost basis inching up at this phase. So I generally think that while it's been weaker than expected, I generally view that the cycle is going to go on longer than expected because I think we're driven by other things, ranging from regulatory actions, ranging from liquidity, ranging from all sorts of other things, fiscal, economic stuff, and very much less so to a nearly negligible degree the supply halving cycle.
Bitcoin is increasingly showing characteristics of a mature macro asset rather than a purely speculative instrument. The market's behavior is now driven more by macroeconomic forces, liquidity conditions, and institutional participation than by the traditional 4-year halving cycle or retail sentiment, which suggests a deeper level of market sophistication. As sophisticated investors and institutions take larger positions, Bitcoin begins to behave more like traditional financial assets, with rebalancing, measured flows, and reduced volatility relative to earlier cycles. While short-term price swings and corrections remain possible, the overall trajectory points towards steady, structural growth, underpinned by its resilience amid economic turbulence and fiscal dominance. For investors, this implies that understanding broader economic trends, liquidity dynamics, and institutional activity may provide more insight than chasing short-term gains, reinforcing Bitcoin's role as both a store of value and a strategic portfolio component. Do you think Bitcoin's transition into a macro asset will sustain long-term growth, or are short-term corrections still inevitable? As Bitcoin continues its evolution into a mature macro asset, share your thoughts in the comments below, and don't forget to like, share, and subscribe for more in-depth crypto analysis.